Hello, and welcome to the 18th PetroNerds podcast. Today is Thursday, June 3rd, 2021, and I am back with my co-host Ethan Bellamy in my kitchen.
Nice to see you again, Trisha Jean Curtis.
Oh, dropping the middle name. Oh no. Yes, Trisha J Coffee on Twitter. Nice to see you as well. So we have a jam-packed agenda today, loaded for you. I was in DC last week, so many things happened in the oil and energy space, and Ethan and I are going to dive into it. We're going to talk about this forum I was just at with my former employer, the Energy Policy Research Foundation, who just did an event on natural gas literally this morning, so I'm running off a lot of coffee and not a lot of sleep. And we're going to talk about some of the things that the Biden administration has done with their executive orders and the things that correlates pretty well to what's going on with the Exxon board and the activism as well. We're also going to touch on Dakota Access pipeline and obviously OPEC and oil prices and everything happening. So jam-packed agenda. We're going to jump right in it. Ethan.
Yes, and we should benchmark the discussion by saying that we just had a big oil draw, but we had a big products build, and July WTI is trading at 68 and 30 cents.
I saw it hit 69.
It did, yeah. It came back because the products build was too big.
Yes.
But that is a compelling price for everybody on this podcast who's probably a net long listener, is my guess.
It's a really compelling price, and I think it's also, I was explaining to clients this week and working on some presentations, and I basically said, look, we have a very dual bifurcated world that I think has been developed really coherent, really only probably in the last few weeks have I think folks got really excited about the this big bull run up in oil prices. And this is obviously in tandem with that other aspects of inflation, but you've got everybody going green and going crazy on ESG and everything. At the same time, you have oil prices running up, and you are starting to hear folks pivot back into oil and gas. Dan Pickering mentioned this on the Clubhouse event with Chuck Yates, where he actually called out Chuck for saying, hey, this is different. And he was saying, look, we're actually starting to see just in the last couple of months, people pivoting back into oil and gas. We are seeing guys on Bloomberg, JP Morgan guys, everybody basically advising their clients to get back into oil as a hedge against inflation. And that's just a little piece of it, but it's a reality. I mean, you can't have oil prices this high without people wanting to pivot back into it, especially in light of having everything else that's also inflating.
Yeah, so two aspects of the inflationary story. The first is the macro monetary policy with so much money being printed lately. So that is obviously inflationary on a large scale. Every specific market has its different supply and demand fundamentals. The oil dynamics are very constructive on a fundamental basis right now as we see the recovery underway. But there is that sort of Damocles of OPEC and what their policy is going to be hanging over the market. So we talked a lot in the past about what they're trying to do to prevent demand destruction, but also to take advantage of potentially selling securities at Saudi Aramco. So the Saudis want to sell some securities, and you think that may have some influence on how they don't necessarily flood the market in the near term to suppress prices.
Well, yeah, I mean, I think so. OPEC had their meeting. So we had the meeting, and really, this is what sort of sold the market into like this, everybody going crazy. So everybody getting really, really excited about oil prices. And I wouldn't say people like flooding back in, but last week, obviously, when I was in DC, you had the whole debacle with Exxon and Chevron and Shell, which we'll get into. And then people were waiting to see what's happening with OPEC. And now it's like oil prices are great and it's going to the moon. So the Saudis, though, basically said, I mean, they commented on the IEA report, which is pretty funny because they were basically saying it was in la la land. So the IEA report on net zero 2050. So they called that out saying it was BS essentially.
And the Russian oil minister said if you did that, we'll go to $200 a barrel.
Yeah, I mean, they basically just said you're helping us essentially. So I mean, to be fair, I mean, they shouldn't really be giving it the credibility that other folks are giving it because it was a thought exercise. Even though Fatih Birol has now said that it's one of his best and most important works that he's done. And so we can come back to that, but I think there's a lot of problems with that in general. Like what's the agenda of that report? Today at this EPRINC event, they talked about it as well of like, hey, this has got everybody in a tizzy. So in tandem with oil prices going crazy, you have that report, which says oil prices would be 37 WTI in 2021, which it's 2021. So, and it's not 37 WTI, it's nearly 70. So, I mean, we're just having two different worlds. But back to OPEC and the Saudis, I think, the Saudis have basically said, we're not going to do anything more. So they didn't change anything. They just said, we're going to add these barrels back to the market, these 2 million barrels a day that we said we were going to bring back, which was their 1 million barrels a day that they had done the cut in January and February. And then they've kept that. So we mentioned in our last podcast that Saudi production as of April was like 8.1 million barrels a day and change. And that overall OPEC production in April, as of the last OPEC report, is about 25 million barrels per day. And they were benefited a little bit by some slipping in Venezuela. So they're saying we're going to, over May, June, and July, you will see basically 2 million barrels a day brought back on. And so obviously over the course of May, we've seen it. We'll have to see what happens in June and July. But I want to caution folks, we haven't seen the barrels actually, we haven't seen the July barrels. So that those additions that have to be on there, they have to actually come onto the market. And I do think the fundamentals are positive and that they are getting absorbed. I mean, everything going on with India, and India was not in full lockdown. I mean, their mobility indices have come down significantly. We saw that in IEA's monthly report. But I mean, EIA revised India demand by 400,000 barrels per day, but it didn't create the whole market because we have enough momentum, especially in the US. I mean, US demand is just ratcheting up, crushing it. We're basically at pre-COVID, we're at like 2019 level. We're at 20 million barrels a day demand, which is fascinating because our changes in behavior, we've offset in a lot of ways. Like we're driving more in different ways. We're not driving to work, but you're driving in the middle of the day to do different stuff with your kids. Aren't you? You're coming over here, like all kinds of different behavior changes that a lot of people are doing. And we're flying a lot domestically. And so we're still off on jet fuel demand, but we've recovered pretty well given that we haven't actually opened to the international market, which means we probably will see, and this gets to Goldman Sachs, Jeff Curry saying, we're going to see 80 this summer, that when things do really open and Europe is open by, summer and fall, that then we'll have a supply shortage. But that's all based upon OPEC OPEC Plus bringing these 2 million barrels a day back, but then not doing anything. And they didn't say we're 100% not going to do anything. They left it open on purpose. Intentionally, they left it open because they're doing a monthly guide. They meet every month and they do this. And so, next month, if it looks bad, they could bring less crude back to the market, or something. They could even make it tighter. But there's an incentive for the Saudis to keep prices inflated. So technically speaking, according to Goldman Sachs, and you can tell me if you agree with these numbers, but technically speaking, according to Goldman Sachs, we have, we'll be at 100 million barrels a day of demand before the end of the year, and that we will be shy by a couple million barrels a day. And so that we'll be short, the market will be short, and that's where prices will spike before and will continue to spike. So that means that 100 million barrels a day is just pre-COVID levels. That just means we're getting back to normal. And maybe if we go above that, that's great. We're increasing demand. But that's pre-COVID levels, so it means that somebody's holding barrels back. Obviously, the 2 million barrels a day from the U.S. that we're at 11, I assume will be a little higher. OPEC and IEA both think that we're going to decline this year. I think they're very wrong about that. I don't think U.S. production is going to decline 200,000 barrels a day this year. But that means that OPEC's holding these barrels back. And that's artificial holding back. And so there's an incentive to do that. That's because they want to, whether they want to sell assets in gas pipelines or oil pipelines or bring more share, sell more stakes in Saudi shares. Oh, by the way, they also need $75 Brent to clear the Saudi Aramco dividend.
Yeah, okay. So I don't know what I want to pick up on there, but the main thing I want to pivot to is what could monkey wrench this constructive story that seems to be percolating through the market. And I don't think that this is necessarily the case, but the obvious wild card on supply is Iran. So Iran activity has been pretty remarkable. So first, their largest ship caught on fire and sank in the Gulf of Oman. The state-owned refinery 20K outside of Tehran caught on fire, and then that was the same day, Wednesday of this week. And then we have the JCPOA meeting, which is most of the superpowers and nuclear-armed countries that are talking about the uranium enrichment program. That's on a week-long break, and then we have the Iranian election coming up. So most of the things I read on Twitter are sarcastic, but to be fair, but I posted, what is the theoretical production limit of Iran? And how much would it cost them in terms of CapEx to get there, and how fast could they do it? And please denominate your answers in what you want.
I saw that.
Yeah, okay. So
I didn't follow all of the responses.
Yeah, so the question really is, how fast and how quickly and how feasible is it for the Iranians to add 2-3 million barrels a day production?
I think it's I think it's way more feasible to add 1 million barrels a day, which is really what we're talking about than most people realize. So there's a few things I've noticed in the market, and that's like, this is, again, you 10 o'clock to 1 a.m., the market has just, that's all we're talking about is oil prices for the past week and everything in Iran. And so you have all kinds of speculators getting on Bloomberg at night and saying, okay, yes, you can easily add 1 million barrels a day back. No, we can't easily add 1 million barrels a day back. Jeff Curry from Goldman saying it's not, it'll take longer because of these nuclear agreements. They're already, part of this is that we have some opaqueness in the market. I mean, we don't have a lot of clarity exactly. Like, we revised our numbers for supply and demand 2 years back. So right now, we think we know what fundamentals are. We think we know supply. We think we know demand. We don't know actually exactly. We know U.S. supply and demand really well because we have a really transparent and clear market. We don't actually have that globally. It's a little bit more murky. So the Iran thing, I think, does cloud it, because I've heard a lot of folks saying, Iran's only producing, they're producing less than what their OPEC numbers actually show that they're producing, which is about 2 million barrels per day. We know they're producing at least, and they say they're not exporting anything. We know they're exporting almost 1 million barrels a day to China right now. Like, we know that. That is absolutely given. That's been confirmed by a number of different sources. And yet you have analysts and folks doing their oil price numbers, assuming that Iran isn't exporting. They're already exporting. So it's kind of barrels that are, because they're going directly to China, I don't know if they're getting, assessed in the market appropriately. So it's a positive thing overall that the market's handling those and China's getting those. China could just be stockpiling them, though. So that it's a little bit more murky there. But we know they're they actually just opened up so that pipeline we talked about, that I believe is the JAS terminal and pipeline that goes around the Strait of Hormuz, that's now exporting. So these people who get on TV and tell you, oh, when the JCPOA, when we rejoin this agreement and Iran starts exporting, they're already exporting, folks. They literally are exporting from this pipeline that moved around, the Strait of Hormuz. And they've done all this simultaneousely while they've increased their uranium enrichment intentionally. They've increased it to it's at 60%. The IEA, the International Atomic Energy Agency, just did their review, and basically, obviously, shocker, they had some questions about what they were doing, and it didn't really work out. That's why we have not hit an agreement or deal. And Iran is saying, every week you hear them saying, we're getting really close. Rouhani keeps saying we're getting really close. Well, they have an election basically, I think it's June 16th. So they have an election coming up. All the moderates, shocking again, have been removed from the pool. So it's only hardliners. So we have an election with super hardliners. They've increased their uranium enrichment. They failed the International Atomic Energy Agency thing, and they're already exporting crude. So what exactly are lifting sanctions going to do anyway, other than handing them, more keys to the kingdom? I just don't understand this. And I don't think this is, OPEC said that they said, quote, they didn't even talk about Iran, which is a load of crap. We know they talked about Iran, but they said, quote, they didn't talk about it, meaning it's a bigger issue than people want to make it out to be.
Well, I think anybody on this call, on this podcast, hopes that you're right, because I think there are a lot of people who'd like to see $80 a barrel oil. I think we should move on to. Do
you think we clarified the risks, though, on the downside of? I think we're. I'm not saying. I don't think Ethan and I are nearly like crazy bullish. We can see higher oil prices. The risks, I think you were just saying, though, on the downside, isn't just that you bring up these Iran barrels back. I think it's the market not completely interpreting it correctly. And I think this inflation piece, the one thing people are getting wrong is that when is the last time, you and I remember, and I'm not old enough to remember real inflation. I am old enough to remember 2008, and I'm old enough to remember $150 oil. We didn't have real inflation then. We have inflation now, and we have running up in oil prices. There is a difference. And the reason the difference is because our dollar is being, in previous bouts of high oil prices, it wasn't as, the dollar didn't play maybe as big of a role. Now the dollar is getting hammered because everyone sees our inflation, particularly, this is in the global surprise inflation index on Bloomberg, we have skyrocketed over every other country, over the entire world, which means our fiscal policies, our monetary policies, everything Biden is doing, all the stimulus, people are viewing the dollar poorly. We're getting hammered by that. And I think that in tandem with high oil prices, if the Feds has to start talking about tapering, or, if they have to tap on the brakes or just ease tapering, that could help the dollar, supportive of the dollar, and it could cool off prices a little bit. And that is not like prices aren't going to crash. It's just this, perfect momentum up to $150 oil. We just may not see that perfect trajectory because it's not as simple as supply and demand. And the Saudis are keeping it artificially inflated.
Yeah, we should say that a lot of the non-energy inflation is linked to a pause in a stoppage in the supply chain for goods and services during COVID. And we've seen the rebound there. So just an anecdote that I found interesting. I went to try, my sons are 9 and 11 and they're in that hyper growth phase where everything they have is out of phase in 6 months or so. I tried to buy my youngest son a bike, and the supply chain backlog, they're saying 2024 until it balances out. Now let's just carve off two years of that because the sales guys are trying to sell a lot of bikes and make it seem like the supply crunch is worse than it is. The fact that you can't buy a bike that you want to buy in this economy with the supply chain, logistics, manufacturing, R&D that we have is pretty surprising.
Yeah, well, and we mentioned before, I think these anecdotal stories, all you have to do is really look at your life and how you're spending your money and what you are doing, and think about everyone else doing that. Because this is that's a sign of the pent up demand, is that you weren't buying your kids a bike during COVID. You weren't going out doing stuff. Now people are everything, they're crazy about going out and doing it. Restaurants are booked, everything's crazy. And this pandemic induced supply crunch, it's part of it. So that's the argument that the Fed is making to a degree, is that why they see the inflation as transitory. Other folks, Lauren Summers, other ones that are getting, people are getting pretty fearful of, literally using the words fearful. Big names are fearful of this inflation because it's not just, it's pandemic induced and there's aspects to it, but then then you have the inflation piece to it. And eventually, oil prices come down. Everything else, when those bike prices go up, do they lower the prices for the consumer? No. They keep those prices up and you keep paying it and they pocket it. So that's real inflation that never goes away. Oil price is one of those things that goes up and goes down and we pay differences. But very few other things that they actually lower the prices back. So I'm pretty concerned with lumber prices, escalating, that they're not necessarily going to, the housing guys aren't going to be like, oh yeah, lumber prices went down. Maybe if you are doing it yourself and building it, you're going to see that, but not if you're buying a house. So there's all these aspects to it, but I think corporations are also hoarding. And I think we mentioned this before, but because corporations are seeing this, we are seeing them hoarding. The pandemic is, I have got turned on to a new podcast as well on China and Africa. And it's really good because they're talking about the South, the global South, and the fact that the pandemic is raging. And, we don't feel it right now. We're fully vaccinated and we're going out, we're doing everything. And in the global South, in Vietnam, it's a mess right now. They're in full lockdown. India is not, it's getting better. They went from 350,000 cases a day to 270,000 cases a day. It's declining. But now they have this really awful fungal infection that is common in India, but it's not common for everyone. But now, because of the steroids that they've given all these patients, it's rampant. And so people are literally losing their sight and losing their eyes to save them. And it's a huge problem. So all kinds of things in India. And India was a big problem of the supply chain, perfect example of the supply chain crunch for the vaccines itself, because all these countries were supposed to get the vaccine supplied by India. And because India is going through this wave, they can't supply the actual vaccine. So it's a huge problem. And then you just haven't had the same vaccine uptake. One, they haven't had the availability of these vaccines. And they also haven't had the uptake because in places, in China and even in Hong Kong, they did so well with the first waves and it went away that people are just saying, well, why do I have to take the vaccine? So these things are all really cornerstone to the supply chain because it's where, Singapore is a major trading hub. All these things, if something happens, if there's a hiccup, and especially India, we see the ripple effects throughout the world. Taiwan's going through a major drought and you need a lot of water to make semiconductors, and that's the major semiconductor hub. So that is one of the big problems. So it's many, many things. So I part of me doesn't completely disagree with everything the Fed has said of why they think that some of this is transitory. I just disagree with, at the end of the day, when you have this month-over-month inflation that's nearing, I put it on Twitter and put it on LinkedIn, the Bureau of Economic Analysis put those numbers out, taking out energy out of it, and we were at 0.7% month-over-month, and it's the month-over-month figures that what happens when we get to the end of the year and we're still doing that. So I think that's what we just have to be cautious of. And that in tandem with inflation is good if you're having economic growth. Inflation, though, is going to reduce people's purchasing power, which could actually impact oil demand.
Yes, it could.
So I think we've rounded up. We talk about a lot. We will continue to talk about inflation and oil prices because this is a story that just keeps on. This is never ending for a while. So shall we pivot back to natural gas and this EPRING thing and this Wall Street Journal article?
Sure, and I should mention, and I don't want to go too much into this, but we have seen a little bit of a consolidation wave.
Absolutely.
So
please do.
There's a bidding war for Inter Pipeline with Pembina and Brookfield going after what is effectively an $8 billion-ish asset. We saw Kinder Morgan buy Stagecoach from Crestwood. That's a storage asset up in the Northeast. We saw Southwestern take out Indigo Natural Resources, the Haynesville, for $2.7 billion. That was a pretty big deal. And then a private deal, Colgate Energy Partners, buying Lux Energy. I love that name, Lux Energy. And that was an undisclosed price, and that was in the Permian. So we have seen some midstream and upstream consolidation, which I see as constructive. Obviously, there are differences between all these markets, but if you're seeing deals come together, that is, in my view, part and parcel of $60 to $70 oil, allowing the bid-ask spread to close and allowing people to transact without the expectation there'll be major price changes, and they'll look really stupid for selling at the bottom. I think that stage is over. There could be some upside to oil if we get 80, but if we go from 70 to 80, you don't necessarily look dumb selling at that price level.
I do agree with you, Ethan.
Wow.
I actually agree with you. Lots of caveats to that because it makes me think about the stuff that happened with the Exxon board, because I do think now that there should be an incentive for folks to actually, even if you're not hearing companies talking about going private in their boardrooms, I guarantee you somebody has brought it up. If you're public and you're a small enough company, if you're not thinking about going private, you're out of your mind. You should at least be having the conversation to figure out how to do it. Now, that being said, apparently the administration is going back after sage grouse, so that might not help you if you're private anyway, because the sage grouse might be enlisted as an endangered species, but that's for another time.
Yeah, but I should also point out that everywhere you look, regulation is becoming more challenging. The core processes are becoming more challenging. Red tape is becoming more onerous. Doing anything with the federal government is going to take you longer. It's going to cost you more. So what that does is it makes it better to be bigger.
Yep.
And it instigates consolidation because you need your own internal resources and balance sheet to navigate some of these issues. And we saw that interesting merger in Colorado of Bonanza Creek turning into Civitas.
Mm-hmm.
So
with extraction.
With extraction. So basin consolidation in order to deal with these regulatory agencies, I think makes a lot of sense because you need a bunch of expertise, and spreading that out over a bigger asset base makes a lot of sense.
I think on paper, from that side, I think it sounds good, and in theory, that's how it should work. But if this stuff with the activist pressure and actually the executive order that the administration has just passed on the financial side with climate change, that stuff could pressure it. So I think this consolidation piece, the trajectory of consolidation, especially with oil prices, are a huge part of this. I mean, oil prices at these levels, everybody wants, all of a sudden people want to buy in. And I know because my phone's ringing off the hook, and I know from clients and people that you're talking to, if you're talking to anyone in the space, it wasn't hot to go buy, production. Now everybody wants it. You can't, you have 80 different buyers. So oil prices are high, and I think someone last night I heard on TV said, it wasn't referring to oil, but was just referring to the economy, and said it's boom and bust. And we always forget the bust. And I used to always say this in presentations because I grew up around the oil and gas business, is that it's a boom and bust business. The booms are great and the busts are really, really hard. And we're booming right now. And folks have already, I didn't say they've forgotten, but we were at minus 37 last April. So they're forgetting quickly. So this booming and this consolidation, I think, is positive in that a lot of it should have happened before. I don't know if the Cimarex Cabot thing, makes complete sense to me. I need to dive into it. I mean, I think from their standpoint, it's probably, I actually haven't listened to the call, but I think it's, we're adding this additional diversity. I think the gas side, in terms of the Marcellus pivoting into Haynesville, that makes total sense. that's giving exposure to the Haynesville, and Haynesville becoming a little more public. Haynesville's on private land, or most of Haynesville's relatively private. So that stuff makes sense to me. But, I've listened to this EPRINC event opened up with actually someone with the administration, with the Office of Fossil Energy. Chief of Staff of Fossil Energy. It's Dr. Talati, and she opened up with just, a wide, she didn't say anything specific or super, super concrete, but she was basically just saying, yes, we're doing fossil energy and we're going to have to get greener and cleaner and all this stuff. It didn't sound to me like we're embracing oil and gas by any stretch of the imagination. So I just think that the pressures basically it's going to be no flaring at all. So there's zero flaring, which, we were moving that direction anyway, and all about methane and capturing. But I think the problem is it's always the goals out here. So come achieve it. So the industry is going to do that anyway. But then I want to know what's next. It's like, okay, well, you hit it, and now we're really going to go after you. And I just think that that's not, even if the Office of Fossil Energy, which I believe they're changing their name to Fossil and Carbon. So that's or carbon capture or something. So that's being changed. But the point is that, these goals are increasingly being changed. And I think that plays a role, all this plays a role in that consolidation, whether or not that helps or hurts. And from Exxon's standpoint, I don't think it's helping them.
So I should disclose that we own, so do you want to go into Exxon? Or do you want to talk about natural gas some more?
I think we should talk about natural gas a little bit more. Okay. I think we should pivot that because this piece on the Energy Policy Research Foundation, along with the joint, it was the Global Gas Center, did a joint webinar. It was actually really a lot of speakers. We only spoke for like 7 minutes, but it was a lot of information. And the takeaway was pretty in that it was a good group of different individuals and with various backgrounds. And I would say that these are folks that I've worked with in the industry for a long time. And I mean, folks that have been briefing major oil companies. Avance Andre is one of them, that have a great amount of experience in this business. And they are frankly beyond like kind of alarmed at the stuff with like Exxon, with the activism on the boards and just the movement of the ESG movement. And not alarmed in that we didn't see it coming, we don't know what ESG is, like this all makes sense. It's the role that it's playing and how it can distort markets. And I'm very concerned at the executive orders that have been issued on the financial side in tandem with this. But my presentation was essentially on what U.S. oil or what gas production is and what are sort of the risks and vulnerabilities with federal leasing bans and things like that, and what's the trajectory of it. But one of the biggest takeaways for me was a gentleman by Mr. Paul Teese, who's an adjunct professor at the Stern School of Business. And, he works in the investment space really closely. And so when he was talking particularly about ESG and really emphasizing that a lot of it's the E now, obviously the environmental. And that's what I've been explaining to clients as well, is that social and governance, I would say I think personally have taken a little bit of a backseat, because if it was on the governance side, then we would be going after mining companies and solar companies and stuff in John. So it seems to be much more about the environmental stuff. And that piece is so conflated, because that's assuming what the public wants. So this environmental piece is everything. There was another guy that was the chief sustainability officer that was on there, and he was just explaining that how amazing his life has been, how many parties he's getting invited to since he's had a new title of chief sustainability officer. And I mean, so the fact that that's a reality, that people like want to talk to you more and they're doing that. I mean, I'm not poo-pooing this. I'm just saying like this is a trend. This is a hyperbole. This is, this is a boom. This is no different than anything else. People are so intoxicated with this green movement, and there's so much, and we still have this massive easy money, and so much easy money. And so you have these two things. I don't think without the Biden administration, you wouldn't have had the catalyst of what we're seeing right now. I don't think you would have necessarily the Exxon board moves had the Biden administration not won and done, very clearly everything they've done on climate. And every time I think that the administration is maybe, and a little bit, we'll come to the DAPL thing, we'll talk about DAPL, but, every time when I think, maybe they're not as against oil and gas as I think they might be, this administration, then I go through the executive orders in the Federal Register and I pull them up and I read through them. And you just have to read through them to see it and to realize that, you have more executive orders than any other president. Biden is basically on track to have double the executive orders of Trump, Obama, and Bush Jr. in their first term. So he's on track to have over 100 executive orders before the end of the year. And 5 of them are related to climate change. And climate change is his pivotal, focus of the entire, of his entire administration. And so it's very, very concerning to me. And from a natural gas standpoint, I told all these folks, I said, look, if I was to bet everything, and I've said it on this podcast, and I've said it a lot, if I was to bet everything I have, this house, everything, I would go long on that gas. Because when all this falls apart and the things of this, and I mean this and as sincerely as I can to a lot of folks in the solar and wind side, yes, a lot of it's going to work, a lot of renewables will work, but when the pieces of this of pushing too hard, too fast break, natural gas is what is going to be, it's going to still be standing, and it's still going to work, and it's still going to help green, and help countries actually reduce their carbon emissions. And I think it's here to stay.
Yeah, and if you look at a country like India, the number one energy problem is lack of energy, followed secondly by people having to deal with indoor air pollution from burning dung, for example, to heat and cook. And so there's almost this, let me co-opt some of their language, this colonialist, imperialist view of energy where it's, hey, you under-resourced, third world countries, how dare you want to use the amount of energy we use in the cheapest form and fashion and the most reliable fashion that is available to you. It is very elitist Davos man type stuff that rankles me a little bit. And, clearly if US LNG can support the growth of natural gas in India, for example, and allow them to have, very lower carbon and much healthier air quality, that is a path that they should go down. And it sounds like they're going to go down that path.
Well, I think the global south is doing that. This has sort of made me realize that, talking to a couple of my friends at different consulting groups, when they say, hey, these are big consulting groups that are spouting out lots of green stuff and telling people how the world's going to look. And my friends have made comments to me that, hey, our Southern clients are not pleased with stuff. Like, of course, if you're a developing country, you may not like that IEA report. And, the reason I really take, I have a problem with reports like the IEA net zero report is because how it's quoted and how it's used as a backbone to like incentivize people and to go crazy. But these folks in the South that are also dealing with, these countries, these developing countries that are still dealing with the pandemic raging are not exactly loving being told you're going green tomorrow. And they're going to import this gas. But they are concerned increasingly about, literally this webinar was on, is the US going to have the natural gas? Are we going to have it? And I do think it's interesting that my former boss, Lou Pugliese, he didn't get a response from the administration, but he said, look, we're really excited to actually hear from someone from the administration because we have not heard anything. Okay, so we were talking about this EPRINC webinar in this forum and natural gas and in the South and the developing countries consuming this. I think there is a increasing concern by these countries of whether or not, where does the U.S. stand on, truthfully, where does the U.S. stand on fossil fuels? If you're an outsider and you're looking at this, the Biden administration has canceled Keystone XL, and, that was largely symbolic, but they basically went ahead on Nord Stream 2. And so you may be getting a little bit of, if you're on the outside looking in, that may look
failed to take aggressive action to sanction the contractors on Nord Stream.
So, so then there's that. So you could say that's positive. But in terms of the US, if you were an outsider and you're following the internal dynamics of the US closely, I don't think you would read it super well in terms of things are going great. And I think OPEC is probably interpreting that as actually this is, we're going to continue to see production muted. But I think if you're really thinking about, if you're Cheniere or you're Tellurian and your Cheniere Tellurian's, counterparties that are buying this gas, you are looking at this and wanting to know what is the longevity of this. And I think that the Haynesville everybody's talking about the Haynesville. Production is up. These wells they're crushing it. They're 16,000 MCF a day. We're seeing lateral lengths get extended in every single basin. We're seeing massive efficiencies. The U.S. from a technical standpoint is literally has way more to give. But I think that the regulatory side, Marcellus has 2 BCF daily of pipeline capacity. We've mentioned that. But I think if you're Japan and you're looking at the U.S., you are going to need at some point some clarity from the administration. And I think this is very hard for them because they have not come out and said it. they basically have said, I think the Department of Interior, Deb Haaland, has said natural gas and crude oil are going to be around for a long time. She said that, but at the same time banning leasing on federal land pending a review. And then you're hearing the same stuff out of the administration. And so you're kind of talking out of both sides of your mouth. And I think foreign countries that are importing this natural gas or have this dependability, reliability are going to need that. And with all the, these net zero 2050 reports and everybody getting behind them, there isn't a lot of clarity there. And that's not, again, that net zero 20, those reports have a 50% probability on what they're actually trying to achieve. And so that's scary.
In terms of the CO2 impact on temperatures.
Right. And so that's really when you study all this and you put it back all together and you're trying to figure out like the actual answers to everything, I think that is meaning that there's not a lot of certainty, a lot of clarity on exactly what the administration is targeting. Obviously, the issue movement is anti-fossil fuels, and the administration is very much pushing climate change. But to what extent they will push this into foreign policy is a big degree, and that will impact liquefied natural gas. And I have some thoughts on that on this executive order, which I think we can roll into after. We have to get these banning of the. Can we talk about the banning of natural gas in homes, or the Wall Street Journal article?
We have time for that. Let me just say first, in the interest of disclosure, we own ExxonMobil and Cheniere in our energy book at BP Capital. So I just want to disclose we're long both those positions. But for me, the analogy looks like this. I did see on the EPRINC presentation this morning, one of the presenters was talking about the limitation on infrastructure in the Northeast United States and how that will ultimately cap natural gas production there, which is the case because you can't build another pipeline. I haven't gotten anyone to really agree with me on this, and it's probably just a matter of cyclical timing, but I don't expect the FERC to ever certificate another U.S. LNG export project. And that, therefore, in my mind, leads you to the conclusion that there is some embedded scarcity and option value in the existing FERC certificated LNG export projects, particularly with the ones that have the ability to switch between, say, Haynesville and Permian supplies. So we have seen a couple of deals that Tellurian got done recently for contracts on their way to FID, their facility, Driftwood. And certainly Cheniere's in the driver's seat in terms of U.S. LNG. But it's interesting that market for me is interesting to me that market is picking back up now in terms of the ability to contract. And
Tellurian just had an announcement today on their 10-year.
Yeah, with Vitol.
Yep.
So, and those marketing agreements are interesting, particularly in light of the fact that there's significant supply in gutter, et cetera,
right,
globally. But I think it sets us up for a more bullish expectation on natural gas long term. So with that said, you posted on LinkedIn about an issue that's been on and off for a couple years, but is coming to a head now on the municipalities wanting to ban natural gas hookups. Some of this has been forced in the Northeast because there wasn't gas supply. What we're really talking about is the West Coast-ish desire to ban new natural gas hookups for climate reasons. And chefs are up in arms. And some of the Midwestern states and those purplish states that have, liberal cities and a red rural area, which is pretty much the case everywhere, are putting in place state bans on municipalities banning natural gas to prevent access to that energy. So I know you have some thoughts on this. So. Well,
yeah, it was really fun. I think actually I didn't realize LinkedIn must have picked up the post and put it in their post, because I had like 25,000, probably has like 30,000 views. Like 225 people commented on it. The comments were fascinating, by the way, because this Wall Street Journal article is battle brews over banning natural gas to home. So over the weekend, it was pouring rain, so I was studying all weekend and working, and I came across this article and just thought, this has been a timely issue. Robert Norton and I talked about it in the Texas Grid podcast that we had in, I think, episode 6, where we talked about people wanting to put these bans in place. And really, it's just grown in terms of an issue that it's not going away. So you have these red states with governors that are red typically, and then, or Republican led states. But then you have, like Ethan said, you have these more liberal cities, and they some of them oppose just the concept, hasn't passed necessarily. Multiple cities have said, okay, would like to ban natural gas hookups in new builds. Now, on the face of it, that doesn't sound so bad, but it sounds to me like a little bit of greenwashing, because what does it actually do in context? It makes people feel good because it's like, 10 new homes in downtown Denver won't have natural gas hookups. But you got to ask yourself, what does it actually accomplish? Because the grid itself, and we talk about this, but it's important to think about. And, I think a lot about just, the concept of why people are so torn on energy right now. But it is that, so many of us we have to look at this and study it from a more of an engineering standpoint. And it leads us to go a little bananas over this stuff, because the grid in Denver is 30% coal. We're getting roughly 30% of the power from coal, roughly 20% from natural gas. So when to go after the end user, so that's what what everyone's trying to do, is to go after the consumption, and the administration is actually going after supply, but this is saying change the consumer behavior, but the grid is still supplied by coal and natural gas. So you're not changing anything. In fact, you're exacerbating it and making it worse. And so by telling, these new build homes, and by the way, in Denver, new builds go up in weeks. These are crappy, they call them stick and it's stick and shit. That's what they call them. That's what people called them like 5 years ago. But you can see these homes, these duplexes going up within weeks. I walk the dog around and the house is built, it's set up in a day and it's built in 2 weeks. So trust me, it's not a 200-year-old brick home that's going to last forever. And I would wager that, so if that home needs to be completely no natural gas lined into it, that's pulling, all those new builds are pulling on the grid then, pulling more than they would otherwise, because natural gas does, if you're powering your my water heater is powered by natural gas. That went out this weekend, which was not fun because all the rain, but
not the fault of natural gas.
Not the fault of natural gas. This was the fault of the water heater. I won't say the brand of it. But so, powering water heaters, powering your stoves, powering your fireplaces, and sometimes other appliances as well. And so it offsets it, and natural gas has a higher BTU energy content. So it's your electricity. Basically, if you were to power your home with electricity, purely electricity or heat, you need 3 times as much. So you're pulling more on the grid to heat your home. And this is Denver and places. It's when it gets cold in the winter, you will need heat. And when it's hot in the summer, you will want air conditioning. Some people may want to live without air conditioning. I am not one of them. So this is just a reality. And in these cities where, you have temperate climates, this could work. I'm not saying that in every instance this couldn't work, and in test cases, and, maybe they can try it. But the reality is, from the grid system, if you're thinking about doing this on a big scale, you will be pulling on the grid. And then, by the way, you'll be plugging in more, electric vehicles and stuff. And so you have all this demand on the grid, and you haven't changed that grid. So you're pulling on coal and gas, and I know the folks on the other side and the environmental side don't want to, they're like, well, that's just not the argument. We have to put one step in front of, we have to start somewhere. And I understand that you want to start somewhere, but the responses to this in LinkedIn on these were, people were like, well, I didn't even know natural gas. I didn't even know my stove was a climate change issue. Like, I thought I could just cook on whatever I wanted to. And there was a lot of responses of people very much on the far environmental side saying, we absolutely have to ban this. That has to be done tomorrow. And then other folks saying, why don't I get to choose my own fuel in my home? And I think that increasingly that's going to play a role of, banning something. Anytime you put the ban on it, and this administration, I don't know if they're going to want to be listed as the ban. They're banning leasing on federal leases and stuff. You can't ban everything without having some kind of a backlash. So I just don't, this is stuff that's happening from a municipality level. And I think the states are basically, there's a reason the states would do it, because they don't want the pull. There's a number of reasons. You're a Republican state, you're producing your own energy, you're producing natural gas. But I do think the grid thing is an issue. Like, if all these cities are going and doing this, you would have pulls on your grid that could be tricky.
Yeah, so let's hypothesize a liberal city in a blue state 10 years from now where everything is electrified, vehicles are going electrified, you've got basically grid costs accelerating because of the grid build out that's needed to support that. Energy prices are going up. So my issue with this is that it's highly regressive. So most people listening to this podcast probably could afford a 20 or 30% increase in their electric prices. There's a whole segment of the population for which that is could be the difference between positive and negative monthly free cash flow. We already have the low-income heating and assistance program, and many years ago, a gas marketer in Denver wrote about how the shale boom and lowered costs actually did much more than this federal program for heating oil subsidies to make sure that the poorest people in the United States in the Northeast particularly, did not freeze in the winter. And the shale boom, obviously, we destroyed natural gas prices, but the benefit of that to consumers was huge. Most of the policies we see in place are supply restrictive and restrictive against natural gas, and that's going to raise energy prices.
Yeah, and I think, it's not that if this is what somebody really feels and they believe, I respect your standpoint and where you're coming from on it. I disagree with how it's going to work out in practice, and truthfully, I disagree with how one city in one state banning natural gas hookups to new builds is going to have a dent in the whole environmental footprint in terms of the actual CO2 emissions, and therefore in the grand scheme of things, the actual, the temperature change. I would love to know.
It's the one starfish on the beach.
Yeah, I mean, I just don't think, and I know that's more of a, that's how people want the momentum and the changes and the shifts, and then if we all do it and everything. But the reality is that, it's not that you shouldn't do anything because you can't worry, China and India are doing their own thing. But it is a reality because this starts getting into the politics of how people live. And this starts getting into where it becomes a fight, is that you're wanting to change people's behaviors. And I just think about it in Colorado. I mean, go on Zillow and look at homes. Things sell like wildfire. They're selling in the mountains overnight. But look, in the mountains, in Aspen, in anywhere in Colorado, places that you want to enjoy use natural gas. They use fires. So I don't know if people, I'm sure many people ski. Do you really want to ski or go to a restaurant in the winter or anything without propane? So I don't think you can have it both ways. If you can't have natural gas in new builds, then when you go to a restaurant, you shouldn't be able to have propane and sit out there by the fire. I will sit out there by the fire, and I sit up by my fire every night. But I'm just saying, that it does bother me as a consumer of natural, not that it's raw natural gas, it's that I really enjoy sitting by the fire in Colorado, in Wyoming, and I will probably have to move to Wyoming if I'm concerned that, if I buy a house or want to buy land in Colorado and I build a home on it, I'm not going to be able to. I mean, it's a real concern. If my fireplace goes out, or eventually am I going to have a ban where I can't replace it with a fireplace?
Well, let me propose this to you. I actually think what Civitas is doing with selling CO2 neutral gas makes a ton of sense. They can offset the carbon emissions that they sell to their customers more cheaply than we can switch over the entire energy system and bake in the use of an inferior energy delivery mechanism. So what do you think about that?
Well, I think it's positive. It's the direction it needs to go. It's the direction it's going to go anyway. So just like carbon, just like having carbon neutral barrels, the same thing for natural gas. And the cleaner it can be. In Colorado, we have some of the highest emission standards in the country. We actually have some of the air, from an air quality standpoint, from actual oil and gas development, some of the highest. I've been in London listening to the chief economist of the International Energy Agency citing Colorado production standards on emissions. So, and this was in 2016. So we've been ahead of the curve from that standpoint. So that's not a bad thing, right? That's a very good thing. And I think it's going the right direction. And I sound like I'm a little bit crazy on the natural gas thing, but it's the reality of how intrinsic it is. And if you pull up the natural gas map of the US, of the pipelines, how intrinsic and fabricated it is. And, one or two cities doing this. And I say this because this article actually says major cities, including San Francisco, Seattle, Denver, and New York, have either enacted or proposed measures to ban or discourage the use of fossil fuel in new homes and buildings, 2 years after Berkeley, California passed the first such prohibition in the US in 2019. The bans, in turn, led Arizona, Texas, Oklahoma, Tennessee, Kansas, and Louisiana to enact laws outlining such municipal prohibitions in their states before they can spread. And I think there's some consideration to be thinking about literally the technical aspects of this, of that if you start these bans, the reason they don't want to start the ban is because it could trickle out and there are implications for it. I also think is does that, in Denver, we have a fire. The reason I have a natural gas fire is because I can't, some times we have no burn days because of the air quality in the environment. So in the real city of Denver, you have no burn days. Well, now we hear reports and all kinds of reports from environmental agencies, from IEA and everybody, of modern biofuels, which are essentially wood and pellets. So, we're now going back to like burning pellet stove. I'm okay with this. Like I'm not opposed to this, but it's a reality of that you're going from natural gas to pellets or whatever. But the point is that I just don't know if you're going to be able to get rid of all this, especially in places like Colorado, in which people, they're kind of accustomed.
Technically you can. It's just at what price?
Yes, technically you can.
Technically you can, but at what price? Do the changes ultimately become cost prohibitive to the goods and services? Very, very inflationary. So we have reached a natural stopping point. We still have a lot to cover.
We do.
So episode 19 is going to be us talking about executive orders and engine number 1. So
and
DAPL. So we'll conclude here, and we'll come back to you with the exact same order pretty soon.
Thank you guys so much for listening. We will see you shortly.